out this channel. For anyone who doesn't know what this channel is, then you are missing out. No matter what level of a trader you are, intermediate, beginner, advanced, SMB Capital has content for everybody. They will walk you through in every stage, and honestly, they've been monumental in my own trading growth. They've been monumental, I promise you, in your best traders trading growth too. At least one of your best traders won't admit it because he's got too much of an ego. But you know, every trader out there loves SMB Capital. I promise you that. They are the go-to. They are the best channel for day trading, for swing trading content out there, period. There's not a single channel, I promise you. Nope, not even that channel. Not a single channel is better than these guys. Maybe I am, but no. Even I use their channel for content, basically. So I'm watching their content here. Let's go learn from them. Let's go see how we can educate using SMB Capital another day. This one's called Mastering Supply and Demand. I gotta turn down my headphones.
Mastering supply and demand in trading is one of the most important skills you can learn as a trader, and failing to learn it can be a disaster. In this video, you'll get an in-depth guide to mastering supply and demand from our head of trader development, Jeff Holden. I'm Mike Bellafiore, and we're one of the top proprietary trading firms located in New York City since 2005, and proud to have developed numerous 7- and even 8-figure per year traders. Watch, take notes, and learn from a professional trader on our desk so you can grow your trading account.
In this mini course, we're going to define supply and demand the way we talk about it on the desk. There's a little nuance to it, so pay attention. We're going to talk about how you can use it to increase the probability of actually any trade that you're going to take by looking at the components of how supply and demand are playing out.
Okay.
We're going to talk about specifically how to identify supply and demand early. It's different than what a lot of people talk about. So let's get into that. And then we're going to talk through 3 essential steps when you're trading with supply and demand. Finally, we're going to wrap up everything by going through 4 specific trades that we take on the desk that use supply and demand effectively as important components of the trade. The first thing we're going to do is we're going to talk about defining supply and demand. So how do we define supply and demand? Well, supply is obviously sellers, right? It's where this imbalance occurs, where there's more sellers than buyers. That's what drives that down. Excess supply can be very prevalent and show up in a very aggressive manner, but the reality is it can also be very, very passive. It can be tricky, and that trickiness actually is what makes it so beautiful. Because before that aggressive big candled move starts, there's a lot of subtlety. And we can see that shift in the supply that's in the market right now. That little subtle shift is where we're going to start with a lot of our focus, because that big aggressive move comes way later. So many people want to focus on the aggressive move. That's really not a great way to do it.
But I want to catch the move.
The subtlety and that change that leads into that aggressive move, and then take advantage of both those. So supply is essentially just sellers, big players in the market that have a lot of shares to sell. Demand is essentially anybody that needs to get in.
Pretty
Demand
basic concept over there. Pretty sure most of us understand
Sometimes
that. If you don't, then
is
here's an
people
example,
who
I
need to
guess.
cover a short. They'll act in a very urgent manner. Sometimes it's people who want to passively buy the stock. Again, coming back to that 2 components of supply and demand, passive and aggressive. One thing that really bothers us and trips up too many people: supply and demand are not support and resistance. Support and resistance are areas that are created by prior price action. That can line up with supply and demand at different times, but support and resistance are distinct points that are very different than the flex component that we're talking about with supply and demand. That's why it's important for us to break it down. That's why it's important for us to understand. Let's go back to that point again.
So I guess I'm not a supply and demand trader. I'm a support and resistance trader, because that's what I do.
They're in the market.
I trade off of supports and resistances from previous price action.
This shift can always have a couple reasons, which we'll get into, especially when we talk about the trades that we're taking. But think about it as that distinct change, a catalyst. That catalyst actually blows the support and resistance components that can lead
He's
to those
two-way trade
predictable
price
moves
action.
that
Yeah,
support
TH is
and
about to
resistance
rip him
traders
apart. I'm
trade.
gonna love
It
this
blows
one.
them completely out of the
TH
water
hates this
because
guy.
supply and demand components override any support and resistance
TH is
components in the
anti-SMB,
right environment.
anti-Jeff Holden.
It makes support and resistance actually wildly unpredictable. So if we shift our thinking to know what supply and demand are, know how they show up in markets and what it means,
Okay, let's see it.
we can use that catalyst and we can show up and trade along with the big players coming in and disrupting that underlying balance that support and resistance traders like so much. This slight and subtle shift in our thinking gets us halfway to correctly identifying supply and demand. We talked about this point already, but let's go a little deeper now. Supply and demand is not just aggressive buying and selling. It would be so nice and so easy, and it seems really easy if we talk about it from the perspective that supply and demand always are going to be identified using those big aggressive candles. That's what supply and demand are. They're
So that's
big candles
what
that show up on
ARM
the chart.
yesterday was,
But
right? ARM, what we would think was a over demand compared to the supply, and that's why you saw that move. People were just punching long with disregard to what the price they were punching into. That's showing you an over demand of the position. People just want to load up.
Experience has really taught us that that's not the case. We have to be so
But apparently
careful
not the
with this
case.
misconception, because it can really lead to this false expectation. And it really kind of sets a bad, awful trap that a lot of traders can fall into.
Okay.
You think you're trading supply and demand when you're trading these big aggressive candles, but you're really trading the end of that supply and demand. The worst part of it is it can lead us into missing out on some of the actual highest probability trades offered by those big players when the supply and demand components show up passively first and then aggressively later.
So how do we
Most
identify that?
supply and demand trading in the markets that
How do I identify
trade,
that?
they do show up passively. It's this beautiful, subtle, but distinct shift. It's this noticeable pattern, one that produces the kind of trades that leave us just kind of hungry for more, the trades that feel right from the moment we put them on, the kind of trades that leave us with that feeling of connection, that feeling of flow with the market we're trading. So let's break it down. So
The
supply and
hell,
demand
yo,
trading
you
is
guys
a
saw that? Buddy is sitting crisscross applesauce on a computer chair, swinging his legs around. What the hell is he eating? I mean, why am I judging him? Why am I judging him? But still, like,
So let's
look at his
break it down.
leg just swinging crisscross
Supply and
applesauce.
demand
How do you
trading
sit
is
like
a
that, bro?
catalyst. It's a change in the balance that shows up as first passive and then
I don't even fit in
aggressive
this chair like that. Yo, this is
participation.
pretty comfy
If we're
though.
talking about
You know what?
longs, we're talking mostly
I like it.
about passive
I just can't. I
buying
can't swing my legs
into
like you do.
aggressive buying.
Because that's
And then
weird.
that flow back to passive buying.
Nah, this is.
into
Oh,
aggressive
my leg
buying.
just popped.
Those two components, that
Oh, my
catalyst
fat ass just popped my
and then
knee.
that passive and
Oh.
aggressive components have laid the groundwork we now know how to use and how to identify appropriately supply and demand. And that's how
I didn't even
we
pay attention because
increase
my
the
leg popped.
probability on
Can you
any
tell me
trade.
again, please?
Our second point is how you can
I gotta rewind.
use and how those two components change in the balance that shows up as first passive and then aggressive participation. If we're talking about longs, we're talking mostly about passive buying into aggressive buying, and then that flow back to passive buying into aggressive buying.
So that's like
Those two
bouncing off a
components, that
9, bouncing off
catalyst,
21,
and
or
then that
if
passive
when a
and
stock gets
aggressive
bought, it
component
gets sold,
have
but
laid the
immediately gets
groundwork
bought back
we
up.
now
So you
know
want to see that
how to
happen.
use
Or
and
when
how
it
to
gets
identify
when it gets
appropriately
bought, it
supply
immediately
and
gets sold
demand.
down. When
And
it gets
that's
bought, it
how
immediately
we
gets sold down.
increase
So
the
that you want to
probability on
see
any trade.
if
Our
supply
second
is
point
there or
how
demand
you
is
can
there.
use supply and demand to increase the probability of almost any trade. In reality, in trading, we don't need much of an edge in trading to be insanely profitable. We do need a real edge. We need trades with real edge. So let's cover one trade with the real edge, and then as we progress through this supply and demand course, we'll cover those other 4 near the end. But once we have a trade with real world edge, we can use the supply and demand
Yeah, let
component
me
to
just get my
enhance
crystal
the
ball, huh,
probability of a
TH?
trade, whether it's a scalp,
Got
a
2 of them.
move-to-move trade,
Let me shine them
trade to
up real
hold,
quick.
whatever time frame of the trade. Applying the simple, direct principles of supply and demand trading learned here are likely to bring us into that flow where trading just makes sense, where the edges are stacked in our favor. It's that kind of feeling where maybe you get tricked into thinking this could go a little further than I think. So you want to have those problems in your trading. You don't want to be in a position where you're putting the trade on, and as soon as you put it on, it starts to go against you. Applying the principles of supply and demand take an existing edge and allow us to hop a ride on with the big players as they kind of go about their day. It can literally feel like you're sitting down to a blackjack table with a positively stacked deck. As soon as you sit down, you know if you play the right way, if you play your games with some edge, you're likely to see those follow through over and over and over again. Most people will skip over this. We're not going to. We're going to get dirty a little bit, but then we're going to come out with a new sense of how supply and demand really shows up in the actual charts we're trading now. How to identify unusual supply and demand early. This is that passive supply, passive demand. Okay. Aggressive is always going to show up as very clear full bodies. You can very easily define aggressive supply or aggressive demand as 3 full body candles. If it's a 1 minute or a 2 minute or a 5 minute or a 15 minute, whatever time frame you're trading on, even an hourly, when you see 3 full bodied, not a lot of wicks on there, of the same color, same direction, that can be classified.
Where the hell do you see that?
Aggressive.
Here?
Supply if the candles are red and they're going to the downside, or demand if the candles are green and going to the upside. Once we have that,
this
we've
has
identified
tails.
Aggressive supply and aggressive demand. When do we expect there to be a lot of aggressive supply and aggressive demand? When there's higher volatility, significantly heightened volatility. That means maybe the move's already started and then it gets aggressive. That's also prone to much more reversion. So you can see really aggressive supply leading into really aggressive demand, like we see on the chart right here.
I mean,
it makes it dangerous.
Tailed. It's not a full body candle.
Along with the supply in that environment.
Not a full body candle.
It makes it dangerous to trade against the demand in that environment. You want to know when to trade aggressive supply and demand and when to look to be comfortable focused on the passive supply and demand. A simple way to identify passive supply or passive demand is when you have a 3-to-1 ratio. So when you have one large green candle, let's say, and then the next 3 consecutive candles are red, and they take out the entirety of that one green candle. Most of the time, that's showing us that passive but sustained supply, where it looked like there was demand on that green candle, but there's passive and sustained supply right there. That can be the beginning setup for a really big move. It doesn't always show up with that one big candle and then that 3 very clean candles. Sometimes it shows up as the one candle, some sideways action.
I mean, price action in this area is a lot more important than the fact that it did it in 3 bars, honestly. That sounds pretty stupid to me. I'm sorry, Jeff Holden. Look, I have a lot of respect for you guys at SMB Capital, but this is pretty dog shit in my opinion. This is fucking dog shit. Like that 3-to-1 bar reclaim, like I think it's more valuable if you talk to people about how to identify that supply and that demand on the tape. Right now, just by looking at the stock, the chart, I am seeing a lot of fight on the way up. It goes up without a problem here, it gets rejected, gets stuffed, right? You see how it goes up, rejected, goes up, no fight, goes up, no fight, into that same area, fight, goes down, gets right back up, fight right back up. But then when it gets here, there's no more fight for the upside. The bidders are stopping. That's what this candle's telling me. And now, because the bidders are stopping again once we get back into the same high, the sellers are saying, okay, you know what? We know you guys don't have enough buying power. You guys are pussies. We're going to punch into our positions now. So that seller who's here and here is now starting to be aggressive. That seller is starting to be aggressive. You're seeing some passive selling coming in. Obviously, this is hindsight 2020. I already see the future here, so I'm kind of reading the future, but I'm reading the present by already knowing the future. But let's kind of think that we don't know this side of the chart, right? We're just reading it bar by bar. Then big seller comes in. Then another big seller comes in, at which point you can see, or the same seller chases a little bit more. At which point you can see that the buyers fought for it, but they failed the fight. Over here, into these areas where the buyers came in, buyers came back in again. At the same price again, the buyers came back in and they won that fight. This time, the buyers started coming up back in at a higher price, but the sellers were at lower prices. So they fought for a few candles. The sellers lowered their prices. They were trying to be aggressive. They were trying to bully the buyers. But the buyers who were here now were like, okay, you know what? We are joining the party back, and we like the stock. We like the stock. And then that's where you see the battle between the buy and the sell taking place. These candle wicks are all basically telling you that there's still selling pressure. This right here is somewhat of a bull flag. You could have taken the breakout of this area, or you could have waited for the breakout, a pullback, and a hold of this area, and then the launch through it. This 3:1 reclaimed passive supply bullshit, it just sounds fucking retarded to me. I'm sorry. I shouldn't even say the R word. I'm sorry.
Very distinct,
Sounds
very subtle, but distinct.
Rupid to me, rupid.
We're always looking for that 3-to-1 ratio when we're trading supply and demand, because we're not trying to get caught in the middle on any of it. We're trying to appropriately identify when that balance has shifted. And a 3-to-1 ratio tends to be about the appropriate ratio for looking at supply and demand changes in the tape. Here are 3 essential steps for trading with supply and demand. These are going to set up the trades that we're actually going to take. So we need to cover those 3 essential steps. We're going to start by looking at the initiation of where that supply or demand started from. And then we're going to allow that to play out and look for a reinitiation. So again, if we're seeing something passive, let's see where that passive supply started from, or that passive demand started from. Let's see it take out that level. Let's see a reinitiation of that trade. That's where we're going to focus, is on the reinitiation of that supply or demand. And then we're going to focus on measured targets. Measured targets using supply and demand. Some people will talk about Fibonacci.
Measured moves?
Some people will talk about measured
Fibonacci.
moves.
Yeah, measured
Some people will
moves.
talk
There you
about it
go.
trading into a prior resistance or support area, another area of supply.
That's what I
or
do.
Demand. The reality is, at the end of the day, what we found is measured moves. So measuring where the initiation occurred to where the reinitiation occurred, that tends to be the best way to set targets for supply and demand trading. Now let's get into the good stuff, the stuff we've all been waiting for.
Yes,
the
please.
specific trades we can take using supply and demand effectively. So these are going to be 4 trades that we take on the desk. One's in the open, right on the opening drive. Another's the morning trade. Then there's a midday trade, and then there's an afternoon trade. You don't have to add all 4 of these to your playbook. Probably most people won't. You'll find 1 or maybe 2 of them that make a lot of sense to you. On the desk, you'll see people taking breaks after the open, after the morning. During the midday, maybe we'll get some lunch, or they'll kind of be a little more passive and looking for some very specific patterns to occur. But then in the afternoon, everybody will get focused again. Breaking our day up into these quarters allows us to stay in that flow of what's happening with the supply and demand components, because they are always adjusting subtly, but they are adjusting in markets. Let's start with an opening drive trade. The opening drive trade we're talking about is the gap, give, and go.
Ooh,
You'll see a little bit of a
I
visual
like this
reference
trade.
right there, but
One of my
let's
scanners
walk
was
through
actually
it
made a
together.
little bit on this
So the
trade.
gap give and go. You
So
get a gap up.
this is important for
You see
me.
a give. Price action pulls in a
Yeah.
little bit from the open. It usually has to be pretty aggressive as well.
Yeah.
We don't want a methodical, slow,
Yeah.
grindy give. We want to see a pretty
That's exactly what my
aggressive
scanner scans
give
for. I'm
right
happy.
from the
Okay,
open.
okay.
So let's get that give.
Yeah.
And then what we're looking for on that give, what actually happens.
Actually, want to open up my scanner and see what stocks came on my scanner today because I didn't check
ready
it.
to enter the market, hits the market.
I'm gonna
right
open
from
up
the
my
open,
scanner right now and
causes
see
that
what stocks
drop,
popped
that
up on it
give
while this guy's
portion.
talking.
It should be aggressive. That supply should be aggressive. And then we develop this really nice.
Yeah. See, this is what I
usually
want.
consolidation.
Yeah.
The difference between a range
No,
and
breakout.
consolidation, a range would be wide.
That's exactly.
and
This
it could
guy
just
is
chop
talking
around as
about
long as
my
it wants.
setup. I
A
built this
consolidation
scanner,
usually
dude.
is a little bit tighter
I love
because there's
it.
a pending
Tell me more.
resolution.
Exactly what I want to hear, please.
So we get this consolidation down into an area of demand. The area is created by the buyers that are looking to go with that gap. What happens is there's this short-term balance between supply and demand. And in the gap give and go trade, we're looking for and expecting that the buyers that demand will step back in and take us higher. This is probably
that's the
basic
idea.
component.
So you're looking for a stock that gapped up, most likely an earnings-based stock that gapped up. You're looking for it to pull back, some sort of overextension. Maybe you can use indicators like MSI, RSI, and what's the other one? Not MSI. MSI is a computer company. RSI and MACD. There you go. RSI and MACD to help you identify, oversold, overbought indicators. But you're looking for a stock that gapped up or gapped down. You're looking for it to sell off or get bought after it moves into a certain direction. Create a little bit of a consolidation or a hold and then bounce back. This is what me and Dider have been kind of working on. So let me show you what the scanner kind of looks like this. So here we go. We have SOXX popping up on the scanner today at 10:29 a.m. all the way up to 10:31 a.m. So pretty much all the way up into that candle right there popped up into the scanner. So you would have noticed somewhere over here and you would have possibly had drawn the trend line on the stock. So let me kind of pull up SOXX, which is a semiconductor 3 times average bear ETF. And obviously when the markets are down today, this one gaps up to the north side. So you have it pop up on your scanner. Now you wait for the breakout of the trend line. You get long after it breaks the trend line and it pulls back and holds the 9 EMA or the 21 EMA, and now your risk is basically the low of this candle or the low of this candle somewhere here, and keep your tight risk. You don't have to really risk all the way down back over here because that trend is breaking. Now you look for a long from here back through the north side. Maybe you have a couple cents of risk for multiple penny of reward. So beautiful long over there. Let's go take a look at another example. SRTY. Let's see how this one played out. Look at that. Mwah, mamacita, baby. Look at my setup. Talk shit about my setup now, bro. Talk shit about my setup now, bro. I'm gonna dance. I can't wait for my setup. I'm gonna dance. I can't wait for my setup. Talk shit about my setup, bro. Look at this one. SRTY got me happy. Got me doing the money dance. Got me doing the shmoney dance, the Bobby Shmurda dance over here. Initially, though, it did already make a corrective move. It already made one corrective move. So technically, it is not what we want to see it do, but it still popped up on the radar at the time we wanted it, which was 11:42. It made a new daily low after triggering. You know what? I'm not going to tell you my secret. I'm not going to tell you my secret. Come on, that's just stupid. That's just stupid. All right, so let's draw in our trend line. There's your trend line. It breaks the trend line, comes back, holds that low, and whew, mamacita, look at that move over there. SRTY 11:45 was the last time it alerts it for us, and we basically took that trend line breakout right to the north side. Pretty sure this was an earnings play. Was it an earnings play? Let's turn on the extended hours. No, not even an earnings play. Is this some sort of Pro Ultra Share Short Russell 2000. It's a Russell 2000 inverse ETF. So the opposite of IWM, I guess. Opposite of IWM, but wow. Gotta love it. Now let's go see some examples for the short side, because there's a lot more examples for the short side apparently. 943 BILL. Let's see how this one looks. Oh my god, please let me back into the market. Let me kill these markets. BILL popped up on the radar for the short side. Okay, so we have to draw this the trend line somewhere like, where can we draw it? Like somewhere, it's very subjective, obviously. It's very subjective. I'll draw it to my rule is move one. So the first red candle low, I guess, we'll mark it down to. So move one, move two, move three, and then on the move four is where we join the party. So move four would be right here. You would be getting short. How can I maybe I can do it over here. So move one, move two, move three, right? The top move, the bounce back is a move three, and the bounce back down is a move four. So you enter your position here with your stop right at the high of this candle, maybe a couple pennies above that. You can even give a soft stop here and a hard stop above the high of day, and you get a beautiful trade to right back to the downside. Monster short. I think that's basically a 2:1 short. Let's calculate it real quick. Give me the entry right there. Give me the stop right there, and let's see what the profit target all the way to the end of the day. You're basically profiting about a 9 risk to reward. No way. 9.42 R to R apparently, if you do actually give it all the way till the end of the day. 9.7. But let's say you don't actually give it all the way till there and you actually get out somewhere here. You still get 6R based on how much you are risking, which is about 30 cents, compared to how much you end up making, which is $1.60. Big risk to reward. Big risk to reward. Blind Jedi is leaving work right now. Hardworking man. What's the time for you in Cali? It's like, what, 5 hours behind? Oh, what? 10:21 p.m.? Oh, that's Colombo. What the fuck? 7:21 p.m. Damn, that's late, bro. They got you slaving over there. What the hell? Well, not for too long. We're gonna make these NASDAQ futures money and S&P 500 futures money and laugh to the bank with it. Here's a trade that actually didn't work out for us. If you are looking for an example as to the scanner not working, CrowdStrike actually didn't end up working for us. So if you were to draw a trend line, CrowdStrike actually didn't end up working. Anyways, enough of an example test. I can do the rest on my own. Let's kind of go back to this video because we still have quite a bit of to watch.
Of supply and demand trading, because it's very simple and we see it very clearly on the tape. When we look at example after example, you can see that excessive, very abrupt supply. You can see that demand step in. And then you see that urgency of the demand increase as the supply completely evaporates. You see the buyer step up. This is almost always a two-leg trade because we expect that demand to be sustained.
Exactly what I like to see. Mamma mia.
Where that demand was. And we look for two waves because we expect that demand to occur, the pull in, that balance point, and then that reinitiation point. As that area develops right at the lows, we're waiting for it to crack. Once it breaks to the upside, we can enter our position right there. Again, stop at the low below the area where the demand was. And we look for one move, and then that pull in, and then a reinitiation of that demand, and that second move. After that second move, which you can use a double measured move target if you want to, you take the spot from where the initial demand started to where that initial supply kind of met us. And then that pull-in came in. And then on that reinitiation, we're looking for another leg that should be equal to that first leg higher. Sometimes it's even more. After we're done with the open, a lot of times you'll see traders reset, kind of look around and see what else is out there. What other in-play names are trading? Here's a second trade that you'll see traders on the desk make. It's called the Good Morning America.
Good morning,
What
America.
happens in this trade
I
and
like
why
that.
using supply and demand components can really
like
help
that.
drive us in the right direction is because this is an opening range that develops. But unlike an opening range break, the range takes about 30 to 45 minutes, sometimes longer, to develop. So it's not really an opening range break. And when it takes that long to develop, a range break's actually a little bit prone to failure initially. So what we do is we take the components of that trade, look for where there was supply, which created the top of the range, and demand, which created the low of the range. And then we look for that shift, that subtle shift to occur. A lot of times that shift will start at the lows. So we'll see a really hard down move where it looks like there's a ton of supply. But then that sustained buying pressure, that sustained demand that does that reclaim of the entire down move. And then that's the beginning part of our trade. What we actually look for in this trade is we had that up move, and then an abrupt down move. And then we have 1, 2, 3. That's just the
How is
setup
this Good
for
Morning
trade.
America?
What
This
we're
looks like
actually
boring
looking for
America, going to
is
bed
a
America. But I guess you're
reinitiation
looking for that breakout of high a
after
day somewhere at 10:30, 11
demand.
o'clock, or 12 o'clock. So makes sense, right? You got the opening range. Usually stocks like Baba, you'll see them doing this a lot off the open, kind of ranging, and then later on in the day breaking out of the opening range high, like the opening range 30-minute high, then using the opening range 30-minute high as like a support, and then kind of getting higher. Baba is a little bit of a more rare example, but you can see stocks doing this quite a bit.
Has been holding above that area where there was supply previously. Observing that reinitiation.
Denise. Oh yeah, okay. So it's previous supply turning into now demand zone. So it's not just resistance and support. Although he said he doesn't like saying that.
We put our stop just below the area of the break. This gives us killer risk reward because as the trade starts to work,
and then you can get a measured move target too.
And what we're
Makes
really
sense.
trying to walk into is a trending trade.
By a measured move target, you're basically measuring the width of this range, and you're targeting the width of this range as your first profit target, and anything above that is just bonus.
So what we're expecting on this is that supply and demand imbalance that occurred is going to result in an aggressive approach of demand. It's going to result in those aggressive buyers taking us all the way out. We can risk a small amount, but what's our actual target? Since we're initiating there, on the break, and then our stop is just below the lows of that small consolidation, that area of demand, we're actually using a target of the entirety of the range. So if our range is built out, and
he's talking about a bigger range
here, our stop can go right below the area of.
He's talking about a bigger range.
Our entry would be right above the area of the.
But your target is that bigger range.
Using the measured move of the entirety of that consolidation.
Okay.
As our target. So this gives us amazing risk to reward.
So your risk because of this is 2:1, but if you did a measured move from here, what I was talking about, those are usually just 1:1 because you're measuring the breakout where your stop is, where your entry is, and you're taking a profit, basically the width of your risk as your first reward. That's what it's more of a like a flag breakout pattern, which tells you to kind of look for those 1:1 and 1.5:1 and then 2:1 as bonuses. But he's giving you a bigger range. I think this one's kind of wow. Okay, not sure how often this comes into play, but I guess for these guys to talk about it, maybe they have back stats to say that it actually happens more often than not. But I would need to back test this to kind of see the proof of concept behind this. Yeah. He's talking about measuring the width of this range, you still enter here with a tight stop here. You don't have a stop here. You have a stop here because if it comes back through the previous high, then it kind of negates the whole thesis of going higher. It could just rain sideways the whole day and be boring, right? So it needs to hold that area and go higher. That's why your stop is here instead of over here. But your target is the width range of this whole range.
Our expectation is not that it will be aggressive first. Our expectation is that demand is sustained, but it's passive. That's why it didn't just break out and make this giant move to begin with. It's passive demand. Passive demand can lead to aggressive demand later. We don't have to always look for that aggressive demand. Sometimes
I can agree with that.
The move, and that's where we want to exit our position. Our third trade is something that occurs sometimes in the morning, but most often, and one of the best times of day for it, we found, especially in the markets that we're trading right now, is a midday style trade. So what's happened is maybe there was something that was selling off through the open, and then it started to put in a low in the morning and then put in a little bit of a consolidation, and it's giving us an opportunity for a really nice scalp. We call this the backside scalp. It's a great midday trade, midday being like 11:30-ish to 1:30 or something like that. It's a great trade because it tends to catch people a little off guard. But if you're ready for it and you're just sitting at your seat, or maybe you went and got some lunch and came back and were surprised that there was some buying pressure off the lows, let's say, you can walk into a really good scalp. And let's break out where the supply and demand components come into play. So for this scalp, we're going to talk about there being some selling pressure on the open. A lot of times that's sustained selling pressure that gets a little more aggressive later in the day. It's just a really common pattern for that sets up the backside scalp. Then we're going to want to see some demand come in. Again, this is all something that happened in the morning. We're not worried about taking that trade off the low. What we're thinking about is if the price action kind of comes in, puts in a distinct higher low, and then puts in some sort of consolidation, we can then look across and notice where is that entire consolidation occurring. Is it occurring below an area that could be where excessive supply was? Or has that supply now
Okay, I get what he's getting to.
Demand.
Okay.
When that area, this consolidation, is occurring above an area that could have been
bullish
referenced as supply.
Bullish.
We can now use that switch of those components to take advantage of the opportunity presented by those aggressive shorts and look for a very distinct break of the range with our stop below here and a quick, fast target of VWAP. What's really happening with that trade is all the supply that was there on the open is exhausted. But traders are still looking at price saying, well, I think there's going to be more supply there. What is really going on is it's shown nothing but demand for the last period of time. Since the lows were put in, there's a very clear and distinct big player that's present. So what we're doing is we're allowing the price action to move around a little bit, but then allowing.
I've actually seen the setups quite a bit, but if you can catch this right side of the V or
as soon as that
here,
consolidation breaks the upside,
those are money
our
prints.
trade,
Usually,
our stop is below that higher low.
stocks like Nvidia, Tesla, when they sell off, they give you setups like this pretty often. Pretty often, you'll see it happen.
It's a little thing that doesn't.
And then
seem
they
like that
reclaim
much, but you
VWAP
do it
and they get back
effectively,
above
and it adds up
VWAP. They go
really,
back
really
to high a
quickly.
day. It happens.
It uses
Happens on the
components of
QQQ too
that
quite a bit.
subtlety
It
of
happens.
Maybe aggressive demand off the lows into passive demand. Where there once was aggressive supply, now there was aggressive demand, and now there's passive demand. And the way that we're entering our trade off of that passive demand is now
Running
we're
a little
looking for
late, aren't
aggressive
we?
demand
Yeah,
to
I'm
give
getting
us a reason
tired.
to exit.
I'm a little
Finally, the
sleepy.
last
I'm getting
trade
a
that
little
we're gonna cover
tired.
is something we call above the clouds.
We're almost
It's a
done
trade
here,
that was
though.
inspired
We're
by
almost
one of the
done.
people on our desk. He loves hiking. He took this beautiful
This video was
picture,
pretty long,
and it was a picture
28-minute long
literally
video,
was
and we took
above
about an hour
all
and
the
a half
clouds.
just
It was
talking about
unbelievable.
stocks.
That day, or maybe a
We
day
got a
later,
lot of
we
new
were all
viewers
trading,
today. I'm
and this
guessing it's
stock just
because
made
of
this move that went up through the day, and it
Think with
held
Bookmap.
above
He was trying to
all of the
promote my
area of
channel, and I
prior
think because of
resistance.
that we got a lot
It
of
was just
viewers,
holding above the clouds.
new viewers. So it took
In the
quite a bit of a
afternoon,
time, kind of
that can
introducing them to
signify the
myself,
potential that this stock is gonna
or me
close higher
introducing
today.
myself to them and
So what we
answering
do
some
to
of their
identify
questions
this
today.
trade, into the afternoon, we look around at the stocks that were in play. If we see something that is put in a range where there's maybe some supply and there's some demand, then we wait for that range to get broken to the upside. We confirm that the demand is there by seeing the supply turn into demand. The price action has to hold above those clouds. It has to hold above that
Basically
prior
break out of that
supply
range,
area.
and you want to see that
If it
previous
does this,
resistance
and
turn
ideally the
supply
time
or
frame that
demand.
it'll do it is about 10 to 15 minutes, sometimes 20 minutes. But if it does that and it breaks to the upside, we can risk against that area of prior supply now we're observing as current demand. And we can look for, again, a measured move of the entirety
That's crazy.
of the range.
That's crazy. I guess, yeah,
Or
it makes sense.
If we're trading this for close of high of day, we can just hold it till the end of the day. It's very similar to the
MOC
morning
it.
trade, but the components there are different. Because in the morning trade, we're expecting
I
it
still
to be
got the
more
garbage. It's
descending
10:30
trade.
p.m.
We're expecting that demand to be subtle and then grow and then get more aggressive. In the afternoon, in the above the clouds trade, we're actually expecting aggressive demand. We're expecting aggressive demand from the initiation of our trade. If it doesn't go in our favor relatively quickly, it's probably not going to work out as well as we think. So with this trade, we have an expectation that it'll start to work quickly, and then it'll start to get a little more subtle. But we're looking for that very clear and distinct change where supply turned into demand. And then we're looking to go with that on that continuation, that reinitiation.
I demand you to go
So we
up.
talked about measured moves being our primary exit strategy. You know, we measure the range, or we measure that demand. There's a really
We gotta
great
watch
video
these
that you can
videos
do
on
that
like
talks
5
about
times
a lot of
speed because they
different
talk
ways to
so
exit
slow
trades.
for me, dude.
And if you've been struggling in your trading,
They
or
talk
you're
so
in a
slow, it
position
like
where
puts me to
you're in
bed
trades and they're
sometimes.
starting
Like
to go
talk
forward, you
faster,
feel
come
like you're
on.
giving too much
But
back.
I understand
Go
they're
check out
trying to
that
slow
video
it down
because it's a really
for
good guide of
for like
different ways
newer
that you can use
traders,
exit
for
strategies in different
like
situations, different
beginner
trading
traders.
environments.
He like dumbs the information down, he slows it down. He's like the head trader at SMB Capital. But yeah, TH is like, I wonder if this guy actually trades. TH hates him. I like it. I love how TH just absolutely roasts Jeff Holden anytime he's on there. Do you like the other guy? Do you like the skinny guy, Gret? I think that's his name. I think his name's Gret. What's that guy's name? Oh, are they hiring? Oh shit, they are. Oh, you gotta go to New York City? Oh, they got a remote. Oh, no, but you gotta be remote from Miami? Oh, wait, remote trader. Man, I could possibly try and apply. Active news trader. Experienced equities trader. Quant portfolio manager. Where's certified degen role? I can apply for that one. Where's that? No, but we love SMB Capital. We love SMB Capital. I just feel like, you know, when you get to a little bit of a more advanced level, the slowness in their vocal patterns and the beginningness of their vocal patterns kind of puts me to sleep. So, I wish that they kind of talked faster. They kind of got to the juicier part and the meatier part quicker. But that's also part of the YouTube game. That's also part of the YouTube game where you gotta milk the content. You gotta make sure that you are able to bring people. What the hell? Where's the? Why am I not at full cam? You got to make sure you can milk the camera time all the way till the end and make sure people are watching. The more view time, the more this, the more that, the better algorithm, and so on. So I understand it, but that's that. But anyways, hopefully you guys got some amazing trade ideas from all the opportunities that we looked at today. Hopefully you guys are ready for tomorrow. Airbnb, Upstart. What was the other one? I'm trying not to cheat. Airbnb, Upstart. God damn it, I have to cheat. Don't cheat, don't cheat, don't cheat, don't cheat, don't cheat. I'm gonna have to cheat. Airbnb, Upstart, and Hood. There you go. How can I forget Hood? The Prad to Nev. Come on, how can I forget Hood? So yeah, interested to see what those stocks do tomorrow. We'll be looking forward to trade them on my simulation account at the very least. But hopefully you guys are able to kill it on the markets tomorrow. Thanks, Brad. Tomorrow we'll see if the market. Your message got hidden a little bit with that stupid emoji. Let me see if I can find it on the other page. What do you say? We will see if the market can spring back. If not, then yeah, we probably are looking a little bit scary on the market. Are we not, sir? We're pretty worried. But we'll wait for that tomorrow. We'll wait for that tomorrow. No fear for now. We'll just get ready for tomorrow with hope and dreams, and see what happens tomorrow. Thanks for all the newcomers. Thank you for Think with Bookmap for kind of promoting this channel. Thank you for all the OGs, Dieter, TH, Momo, Blind Jedi, all the OGs who keep coming in to show me love, all the new people who showed up today to hit the like and subscribe. I hope you guys show up more often. We are streaming Monday through Thursday, 8 p.m. Eastern Standard Time, after the after hours with Trader Prad. Make sure you show up every single day, Monday to Thursday, 8 p.m. We also do a special Sunday night service at 6 p.m. Eastern Standard Time. So come check that one out on Sunday too. I wish you guys a wonderful day tomorrow. Have an even better sleep. Make sure you wake up in time and slap the markets. I will see you guys tomorrow, 8 o'clock, for another episode of After the After Hours with Trader Prad. Have a great night, ladies and gentlemen. Adios. Wait, before I leave, I need to... Lo-fi girl. Where is it? Okay, anyways. Go to something, Prad. Just go to something. Where's Lo-fi girl? There we go. Okay, guys. Good night. Peace.